You've been bullish.
Yep.
You still?
Still bullish, yep. AI, we bullish AI since for about a year now, coming up in June. It's a secular trend that's not going to end anytime soon. It's got great legs, and it's going to be a long runway. We're just in probably the first few innings of the AI boom and revolution. So it's going to take a lot of chips, a lot of energy, and a lot of patience.
Okay. All that said, if the Fed chair had come out yesterday and was more hawkish, as some had feared he was going to be, I don't think this market would look like it does. And I don't think a lot of these AI names, even with the transformational technology you talk about, would be green. So what about yesterday? Was that a game changer, sort of back to the way it was, so to speak? We can stop thinking about a correction?
Yeah, I think the hawkish rhetoric, I mean, we had two corrections of 7% so far this year. I think the hawkish rhetoric leading into the meeting was kind of good because everybody was like, he's going to be so hawkish, he's going to say the next move is a hike, and that really kind of set him up well. And as I said yesterday, and I think you said today, he was very confident and pretty precise in what he said, that the next move is not going to be a hike, most likely. It's going to be a cut. When that's going to happen, he doesn't know. But in terms of dual mandate, they're back in balance right now. Mm-hmm. And the more things get out of balance, meaning if unemployment ticks up, then he'll pretty much get off his horse and ease. And I think with the ECB easing, the yen getting up to 160, those are macro factors that are pretty much reversed the last, yen's down 5, even though the BOJ was talking it down and may have intervened. The fact that the yen's down, oil's down, back under 80. We saw Starbucks warning that people are, being less aggressive in terms of purchasing their coffee. Mm-hmm. $8, the lower level consumer, even the mid-level consumer is kind of stretched with inflation as well as rates. And some of the things that the Fed targets, they can't target car insurance and they can't target health insurance. So you have a lot of things that the Fed can't target. I think Jay Powell knows that. It's a meat cleaver type approach. You can't precisely target where the inflation's coming from.
Sure, but let me ask you this. The longer they wait to cut, does that increase the risks of something bad happening to the economy or wherever else?
Yeah, of course it does. And I think that's pretty evident. The longer they wait, the chance of a policy mistake goes higher. We had this tug of war between $5 trillion of fiscal spending and 500 basis points of tightening, and the fiscal spending seems to be waning as we end this cycle, this presidential cycle. Mm-hmm. And obviously the Fed's been really tight. We saw obviously regional banks, cracked last spring. That led to a flight to safety to the big cap Mag 7 names, really. And that was because they had large balance sheets. They didn't need funding. And the AI story was just beginning.
Yeah. Buybacks. Now you're getting dividends on top of the whole
dividends,
thing.
Yep, which is always nice. They just
put a little cherry on top of the sundae for you.
Yep. And if you go back and you read, just Mark Zuckerberg, just the fact that the compression that's going on with these large language models, where they're going from, Llama 2 to Llama 3, and Llama 3 is now just starting to be done, and then they're already anticipating Llama 4, Llama 5, and that's all open source for free AI. So where it used to be, like whatever it was per token to train these things, mm-hmm. The cost curve is being bent so rapidly that it's going to be ubiquitous across all of tech.
Are you a believer, as you've been adding, by the way, just for full disclosure, you've been adding to your NVIDIA, adding to Microsoft, adding to Meta, adding to AMD. But are you also a believer in the broadening story?
Yeah, there's going to be second and third derivatives of all this stuff. Obviously, Amazon is our biggest holding. We think the run rate there is crazy. Jassy is in the right spot at the right time and the right leader. I mean, back in 2003, AWS was, already experimenting with large language models to bend the cost curve within Amazon to get cheaper delivery, cheaper prices, faster delivery. And they've been doing that for a while. So AWS is only going to generate more and more revenue. The free cash flow, I think they're talking about $100 billion in free cash flow. So in terms of AI names that are probably the cheapest, I think obviously that's one of our biggest holdings, along with Bitcoin, MSTR, and Clear. But Amazon is really in the driver's seat right now. And I think that in terms of where they can go and the TAM and what the trillions of dollars of revenue that potentially is out there for them to get is really just the tip of the iceberg.